Hi, thanks for joining us. Today we're going to have a wide-ranging conversation about the UK energy mix, the economics and logistics of it, but through the eyes of the institutional investor, hopefully brings it all together. To do that, we've got Ross from Foresight Group joining us, and thank you for being here, Ross. I guess by virtue of the fact that someone is watching this, they'll either know who Foresight Group or Hamilton Court are, possibly both. But for the benefit of those that don't, if you could just give us a rundown of Foresight and also your role within the organisation.
Sure. So Foresight Group is a sustainability-led investment manager. We manage funds on behalf of global investors, pension funds, institutional investors, wealth managers, and retail as well. It's been going for about 30 years now. I work in the infrastructure team where we have 10 billion of infrastructure investments in predominantly renewable energy and energy transition investments. My other role is I am managing director there and also the fund manager for the Foresight Solar Fund.
Fantastic. And for those that don't know, Hamilton Court is a leading UK and European foreign exchange solutions specialist. We help anyone from an SME through to institutional investors and fund managers to public sector bodies understand, quantify and manage their foreign exchange exposures and risks. Now that's over and done with. What I'd like to do is start fairly simply, really, and perhaps build on it from there. Could you just talk through in really simple terms the sort of the unit economics of building and delivering a solar park in the UK?
Sure. I think solar's a well-established technology now, not just in the UK, but globally. And you could take it to the simplest way is it's find a field or some spare land or a rooftop and stick a solar panel on it in some ways. But it's there is a lot more to it than just that. I mean, the economics of it are driven, like a lot of renewable energy generation now, the costs of the equipment itself, so whether that's solar panels or it's wind turbines or increasingly batteries or other areas are coming down in cost. That's incentivizing a lot more institutional investment and private sector investment into these areas. But at the same time, it's got to be balanced up by being able to meet a level of attractive returns for those investors in order to build it in the first place. Because the sums we're talking about here and what we as Foresight Group bringing together money on behalf of institutional investors or retail investors or others is to try to get together those very large sums of capital that are required to build this out. So just take example A, the solar parks. I think when the funds first launched about 10 years ago, we bought a 35 megawatt solar park that was one of the biggest in the country at the time. The sort of costs to build that out these days would be about 20 million pounds. But that's considered a relatively small to mid-sized project these days. So we're getting to much higher quantums of that as well.
So what we're talking about is long-term patient capital with large quantums of money and a wide investor base within the fund. Are you seeing that, given everything that's gone on over the last few years with interest rates rising, inflation rising as well, that there is considerable or sustained appetite for this kind of investment from the UK base, or are you having to search further afield to find that investor?
I think it's worth touching on what you said there about the rise in interest rates. So we manage a listed fund on the FTSE 250, or we actually, as Foresight, manage a couple of them. What has happened has been quite a dislocation in the listed market space, and I think this is a part of it coming down to we've had the biggest most rapid rise in interest rates going from near zero to sort of 5% in a generation. It wasn't since the 70s and the oil crises and the inflation spikes that we've seen there. And most people who are watching will have seen that in their mortgages coming up for renewal, and that's a pretty big hit as well. What it means in the investment space is it's sort of narrowed those levels of return that investors can see from investing in funds like ourselves or like much of the peer group in the renewable space. I think, as you said before, Mark, it's the point of it is it's long-term patient capital, and renewables and solar generation, very similar to infrastructure and all of this. It's a lot of large upfront capital and cost that is then spread over many years. We could be talking 20, 30, even 40-year life and payback. Again, going back to that, it's a bit like buying your house for an individual would be your single biggest ever investment and paying that off over a long period of time. But actually, what we also offer is the opportunity for capital growth over time. So from developing these assets and building them out, and also our dividends do step up. We will uplift them every year, which is not the sort of thing that fixed income will do it.
Right. Okay. I want to play devil's advocate on that point because it doesn't sound like the greatest environment at the moment to be operating within. But if we wind the clock just before or perhaps during, when inflation really started spiking, it did so because of fuel crises and really, really inflated gas prices, which we saw, frankly, in our energy prices at home, bills going up. Surely you guys had a fairly good time of it during that period. Would that be fair to say?
Well, it's a good point, Matt. And if you take us back to just before the spike in the prices, I then counter to that would take you back to the pandemic. So, and I'll put this in the context of, again, infrastructure investment, because really, I think, to be fair, what most of investors want, especially when they're looking for yield, is they want a bit of a nice, reliable, boring, stable yield. Mm-hmm. I think, the power prices definitely surged to unsustainable levels. But if you go to the pandemic, power prices have dropped there with the sort of closure of industry and things like that. Power prices have dropped down to about £20 a megawatt hour.
Right.
And I think actually at that point, the funds were sort of, do we have enough money to sort of pay everything out at the time? Thankfully, due to the way that we hedge prices and things like that, we were able to get through that period. But it was real sort of, the prices were very low at that point and probably not sustainable for the levels of investment or to pay out so I think none of us expected the prices to go that far the other way. We all expected the recovery, and that was a sigh of relief that we could get back to trading and normal. But I think if you ask most of us in terms of the investors, what we are trying to do is actually by hedging forward, which is we do it in finance and currency with you guys, but we also do it in the power markets as well. So we try to forward fix on power prices several years ahead. So that's what helped us out during the times during the lows of the pandemic, that we'd already pre-sold our electricity at prices that were good and comfortable for us. It also meant that when power prices started to surge in the post that with the inflation, that we didn't necessarily pick up all of that benefit because we'd already sold at a lower price too. And we don't see ourselves, we're not energy traders. We're not trying to second guess where the markets are. Yes, we did have some merchant exposure, and yes, that translated into higher cash flows generated for the fund. But I think it's fair to say most of us would prefer not the peaks and the troughs, and to see a more stable energy prices going forward.
Yeah.
And obviously, when you have phases like that, obviously in the pandemic there was nobody rushing to support the private sector. Now things go the other way, and the government comes out with a windfall tax. And I just say, none of us were expecting those levels of pricing. So I think we were more than happy, the industry, nobody was complaining about paying their fair share. It was more than we were expecting to generate out of some of that merchant pricing.
No, I think that's a fair comment. Coming back to your point of volatility, we see it obviously in the FX space, and it's amazing how many businesses are still going, or almost feel deprived when they missed out on the upside. But if you took into account the sleepless nights when prices are moving significantly and you are swinging between profit and loss, actually just some risk mitigation over the top to give yourself, frankly, an easier life and a stable return. Not only good for you, but also your underlying investor base, I guess, have got confidence in the fact that you are continuing to deliver. I'd say probably come rain or shine, but it's pretty good. I'll take that.
But just maybe as a follow-on point, though, like the just to give a bit of hope, and you're saying people still seeing it in their electricity bills, and so we're not necessarily seeing. We hopefully saw them come down a little bit, but actually what we're seeing now is we are seeing the forward power prices, the curves, the prices coming through, dropping off quite a bit over the next few years, and coming back to maybe just a little bit above where they were during before the pandemic. So I think that's good news. Like you say, doesn't that make you guys worried? Well, no, because most of the investments that we made already never assumed this drop and then massive spike anyway. So it's more back in line with our base case assumptions. But again, not wanting to preempt anything, a question about, well, why are we still seeing quite high prices if renewable energy can support?
Well, quite, because the sun shining or the wind blowing is actually relatively predictable, and it hasn't got an input cost. Okay, so you're talking about battery storage there as well. This, for us, we're doing an awful lot of work with batteries, predominantly made in Asia and brought to the UK, in size as well. I mean, it seems like a very inefficient logistical exercise, really, to get something so heavy over here to obviously serve an important purpose. But we must be talking about, a car operates in kilowatts, you probably operate in megawatts, but we're going to need gigawatts and
terawatts.
Possibly terawatts of batteries as well. This comes down to sort of a resource question as well. I guess, have we got the space? Is the cradle-to-grave carbon footprint of a battery significantly better than using a fossil fuel alternative?
In many ways, the questions, and this has always been levied quite a bit around renewable energy, that batteries are manufactured in China, they're shipped all the way there. I mean, we're highly supportive of Foresight of both the UK looking to push ahead in that and also Europe. But you look at it and things have to clearly, China and Asia have got off to a head start in that market. And it is for the other markets. This is the sort of thing where probably government could really help to back and develop those home nations. Right. As a business, when you're looking to develop projects, you have to look around for where the best economics are, because if you're not getting that kind of pricing at the moment, things are not going to be built.
So we're talking sort of a big subsidy. Do the government need to put their hands in their pocket, or do they just need to clear the way?
I think if you clear the way and you give clear guidance in terms of that, it will come down to, I mean, I'm not an expert in this area, but it will come down to manufacturing capability as well, won't it? And then you get into all kinds of questions about state aid and things like that. That's
absolutely.
Of the, But I mean, it would be fantastic if we could reskill people in the country to be focusing on the new green technologies and things like that.
Absolutely. I mean, batteries, like anything, they are a market commodity at this point. And if we could at least manufacture them closer to home, you do kick out the shipping costs. You do create skilled jobs, industry in areas that we know that we're good at industry as well. So moving into storage then, because co-location has become a thing by where you're building a solar park, and actually it makes an awful lot of sense to put a battery next to that and use the same grid connection. But supposing you can get your PV panels from the Far East and you can get your battery, those are easy within the supply chain. Can you actually get it connected to the grid at the moment in the UK? Because there was an awful lot of press around, I think 30 years was the quote, to get something connected to the grid, which feels like a long time.
Yeah, that's, I'd hope not that long. But there is a lot of pressure on the grid and the UK grid at the moment. In fairness, and given that we operate globally, this is not just it's not a UK only problem. Yeah. We do see a lot of the grids are having to take from, you had a lot of centralized large coal power stations, if you can imagine. So you had a few massive producers at various nodes spotted around the country. We're now going to a much more decentralized grid, and you're having to build that infrastructure, trunking down to what could be relatively quite small and decentralized projects as well.
So if you think about the UK then, is it only going to be the southern half of the UK that is solar panel viable?
Not necessarily, and I'll say that, and for full disclosure, we got 50 projects in the UK at the moment, and they're all really in the south or the Midlands. However, it comes down to the cost and the economics. So you have that strength of what's called irradiation, unsurprisingly, is stronger in the south of the country or the Midlands, and it will get lower as you go up into the north and into Scotland. For a particular meteorological reason, and don't get me on that, it is slightly brighter on the eastern side of the country as you get further north, affects around the weather and probably shading nearer the coastal areas. But with the prices of things like solar panels coming down, it's all like you will have a energy yield that is achievable from that. And if you can make the economics of it stack up with the costs of building that kit, obviously you're not necessarily going to make as much in revenue, but if you can still get a reasonable level of income and revenue through at a lower cost up front.
Because the UK government has got, I think the target is right, is 70 gigawatts of solar. We're at not that at the moment.
We're at about 17 to 18 at the moment, so there's still a long way to go. And it's really getting these projects to come through planning and also tie up with the available capital. But as we were talking the other day at a conference I was at, it's also the skills. So we had HR representatives from a developer there saying that we want to be training up young people to be able to work in these industries to help us deliver this. Because like you say, it's a large amount. We need to be adding, in terms of solar, about 4.5 gigawatts in the UK. I think for 2022, we did less than 1. 23 was a bit of an improvement. We were closer between 2 and 3, but we're still not still not hitting those targets at the moment.
Sure. I mean, that is definitely the movement in the right direction at a reasonable pace of increase year on year. We ran the maths briefly, and again, this was sort of very sort of post-it note maths on this. But to get to 4.5 gigawatts is about 3 billion, 2.5, 3 billion a year. And if you then multiply that over 10, 11 years, you're only talking about 30 to 35 billion pounds worth of cost. Those sound like eye-watering numbers on their own, but in infrastructure, that is
infrastructure numbers. If the incentives are there and a clear path, I think there is some regulatory areas that we need greater certainty on.
Yeah.
But the good thing, I think, and I say this going back a sort of best part of 20 years looking at infrastructure, the one thing that the UK really does benefit from, it's always been an attractive market for broader infrastructure investment, going back for the last 30 to 40 years. And the reason is it is down to rule of law, it is down to good land rights, and it is down to the clarity and general support from government over years. So if you can get the planning right and you can get the regulatory environment right, I'm confident there will still be a lot of appetite from the private sector and that international capital that you talk about, because that's three or maybe a bit more billion every year just for solar. Mm-hmm. Solar is, although obviously we see it as very important, but with my shop, very, very important.
Absolutely.
But yeah, there is so much more that is being done for the general energy transition, where I think we're looking at, was it 45 to 70 billion per annum in terms of what is required for that.
Again, I would say, knowing capital markets and the size of capital markets, though, those aren't unachievable numbers to raise if the investment is as close to certain as possible. And I'm guessing the government's role in that is to, where there's nascent technologies, to get in and support that and let the private sector and the established technologies just do their own thing, but make it less of a red tape nightmare. Is that fair?
Yeah, I think when you're looking at things like development bank funding or governments wanting to commit, there is, the established renewable technologies, but I think it's getting there early in those markets to help establish them. A bit like the governments did with the subsidies for solar and wind, but they have now moved on. You're now on things like contracts for difference. There's more a bit of a support mechanism, but the private sector can fund these established technologies. And I think the government going in there to help more nascent areas is exactly the way, a good use of putting funds. If you were able to start with a blank piece of paper, you probably wouldn't be going and doing what we are at the moment if you were to design a whole new grid for a clean energy. The only problem is, but we can't do that because we have the existing infrastructure. We've got to start with what we can. So there is probably a case here of evolution rather than revolution in terms of it. And I remember speaking at that, and there was a lot of views of, we should move to sort of regional-based pricing or low-based pricing. And I just asked the question, there was about 200 people in the room, and I just asked the question whether there were any investors or anybody willing to stump up the money right in the room, and there was nobody. So we were talking, I think in talking to consultants is, you could put through some quite radical changes, but they may take sort of 6, 7, 8 years to implement, by which point we're already at 2030 and you can forget about net zero. So there is a real trade-off here. Yeah. It's about adapting what we've got, and it's probably not going to be perfect in the time being, and there are going to be challenges to get there. But over time, undeniably in all sort of developed or major economies, over time things will move to a cleaner grid.
I guess there's always that evolution versus revolution piece. And you take evolution as long as it was focused and the direction of travel was clear. We see it in our world. If you've got an established process, you don't want to break that, but you do need to sense check it. Things do move on, situations change, and you want to be able to move with the times effectively. You're moving with the times, though, is a longer time scale, isn't it? With the duration of your project, you do need to be able to see 10, 20, 30 years into the future. It's in an ideal world.
Yeah, and if you can give more certainty around that direction of travel, that's what infrastructure, renewable energy investment requires.
Sure.
If I speak for the solar fund, we can go anywhere, but I think we will constrain ourselves by what are the best markets for our investors, and that's simply been the UK, which we always said will be the majority of the fund invested there, but we clearly across Europe and other markets, but we have to weigh up everything on its merits in terms of what is the best risk and reward. And if you look more broadly across the energy transition, please, there is huge opportunity here in the UK. We also have offices in Australia as well that's undergoing a major energy transition. They have the goal of becoming a energy superpower as well.
Does it now just become a case of the bits that are left to variables governments could step in and do, or are there just certain things that you can't ever manage?
I think in terms of that, when it comes to government policy, there's only so much that we can do. We're only one player, so we tend to join together with the investment community and other owners.
Yeah, fantastic. I mean, I have the luxury of working closely with you guys and across the funds, so I get to see emerging technology that you back. I get to see established technologies going into new markets, and also the increase in scale of what you're doing in mature markets, and it's always fascinating to see. So look, hopefully we've cast a bit of light on what's going on, and thank you for your time there. If we haven't, by all means get in touch, and I'm sure Ross will be happy to field any questions. I certainly will as well. So yeah, thank you very much for your time and coming on for a chat, and look forward to seeing where this goes.
Been a pleasure.